Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, May 18th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We finally got a significant wipeout day here where prices pushed below 23.76.5 and in the same session dropped all the way back to our 53s and a gap fill into about 45. So that's where we are at right about now. A major continuation lower, a stop run day where half the day was above 76 half the day was below it. It's my classic stop run day that I usually talk about in the trading room. A big time move. As this thing progressed throughout the day, we knew there was much more downside here. We had 61s on the board for a day target, and then we had the 53s as an overnight swing target into 48s. So we've reached every single one of those targets after breaking through the 76 halves. One thing to keep in mind is the 23.8875 is such an important level. That's the top of the key range here. And with the market failing to find acceptance above the top of that range, the implication was a move back to the midpoint very quickly with a shot to see a continuation across the range. If we come down here and test the bottom of the key range at some point, this is a big time area down here where bulls would want to defend and look to return prices back toward highs. So we could be looking at more weakness to the downside here into the LVN below. Any push into the LVN would be an opportunity for bulls to trap below previous lows and to return back toward 2400. So right now, short term, after a big move down, you can see how big that day was here. Price, we had been looking at a 10-day ADR of about 12.5 points per day. After yesterday's huge move, we're already trading 16 plus points per day now. And that one day, you can see that all of the averages jumped up pretty quickly. That tells you there's an increase in volatility, and that increase in volatility could persist here over the next week or two. So we could be looking at high range days. Overall, after you have a significant high range day like this, the tendency is to find a range and trade in that range and digest that recent move while seeing an overall downward bias. So we could be looking at a little bit more weakness here ahead. Any bounce back toward 80, 88s even, as high as 88s could still be seen as a selling opportunity into the lower edge of the range. So right now we got to see how this thing continues to progress, but as long as price remains below 76.5, we could be looking at more downside pressure into 23.1775. All right, so that's a swing outlook there. Now if we look at the intraday time frame, after the big sell-off here, we've seen price basically pull back. And we've seen a rejection here off the 66s, and then price pushes through the previous session's low and drops into 44s here. That's quite an impulse move down. If we get back to the midpoint of this range here, that could be a nice key range to watch the rest of the session here. So the edges could be very, very important as this thing continues to build out. As this thing trades around 56 here, we could see some initial weakness, but overall, the edges are where it's at. Any push into 66s could be a big-time selling opportunity back down. And we'll watch this key range as it develops and hits that midpoint. All right, now taking a look here at crude oil. Crude oil here had a big-time move here. Let's see. Overall, we've seen that big swing move up. And after the swing move up, what we've talked about was that the market has a tendency to stick around value. And so we have value at 48.74s. After we had this rejection day, or during this rejection day, we were looking for a push into 48.75s. But once the market goes from rejection back to acceptance, the tendency is to stick in that area and just chop around it. That's why I mentioned after we hit our targets here on the next day, I said it could be difficult to trade this zone because you're just going to see price chop back and forth perhaps in this area since it has reached composite VPOC. Now you've seen several days of chopping in that area. We could see another push higher into our final target. This was our last target here, 50.20, the far off target. But again, pullbacks could still be buying opportunity for a continuation higher into that zone. Until then, we could be looking at much more sideways here before the next key move occurs. So let's drop down to the intraday time frame. On an intraday basis here, basically, we've seen price, here it is, For the most part here, what we've seen is a gap up here, having crude oil rollover here in effect, but a nice little wind up and a drop. Again, this is a very important range here. 48.42 is the FOMC level from March 15th, and that zone right there from 48.42 to 49.50, a very clear intraday zone to watch. And again, this looks very similar to the ES here. That could be the range that you're looking to fade the edges on. So we have a nice, clearly established range. 49.5 up above. You're starting to see 48.42 come in. And right now, any push into this upper zone could be an opportunity to fade it back to value. Any push down to this lower edge could be an opportunity to fade it back up. So right now, could be looking at more fade the edges until proven otherwise. Let's take a look at gold futures. One thing with gold here was how significant the squeeze was above 1240. And again, this is something we talked about in the trading room late a couple of days ago, where price was sneakily pushing higher. We had bears defending for couple of weeks, but not getting paid. And that usually leads to a major stop run above 1240. The level we were targeting right away was 1250, with a shot to see 1263. We have now seen 63 here in overnight trading. Remember, 63 is where the stops came out, and now price has come right back to wipe it right on out. So very nice move back up. So far, any pullbacks likely to be buying opportunities for an attempt to push this thing even a little higher. On a monthly basis, we have 1271s as the target to the upside from the pivot low for the month. So based off 75% of ADR, monthly ADR over the last 10 months, we could be looking at a move into 71s. And so more upside could be seen toward that target with as high as 1280 above. All right, let's bring up the intraday chart here. Going to PivotBoss Intraday, what you'll see here is again a nice continuation to the upside. But what happens usually after you have a trending move like this, a price discovery move, you start to see this thing coil back and forth as it establishes acceptance or balance after the move, digestion if you will. So you start to see an expanding range like this. So the next move could short term be down. Any return into 1250 to 52 or below those 54s, right, could be an opportunity to fade and bring it back towards 66s. So right now we could be looking at a short term move downward, followed by a rejection signature that leads us back up the range. So that's what we're looking for here in the short term. Here's a look. I wanted to talk about YM. Got a lot of questions about YM here over the last couple of days in our trading room. What we were looking for was any violation of the 700s. So if we look here, we have basically 750 where the stops came out. And so yesterday, before we even got to that zone, we were talking about how this area right here, you had the market compartmentalized in this key range. So you had the key range high, key range low. The market trades in the lower half of this range. Bears fail to get paid, so the stops come out to the upper end of the range. Bulls attempting to break through the top of the range, but bears absorbing that action. Eventually, you see a lot of bulls that defend in the upper distribution, and the stops come out. You get a classic stop run day here where the midpoint is right where the stops come out, and we get a big time continuation lower. So yesterday, what we were looking for was any violation of 2750 opens the door to the midpoint and then across the range into 2350. So we're looking for a continuation into the lower end of the range here. Very similar to the ES. If we do see a test at the lower end of the range, it would still be an opportunity to trap below the key range into the LVN and a shot at rotating this thing back toward 21,000. So overall, still trending downward short term after the break. Any pullback could be an opportunity to defend and get another leg downward. So right now, looking at a potential push into the lower edge of the range, which could be defended by bulls for a swing reversal higher. All right, that's it for now. Let's see how this thing plays out heading into the rest of the day and the rest of the week. Good luck and trade well.